The hardest thing about investing isn't finding the right strategy. It's sticking with it when everything inside you is screaming to do something else. Ray Dalio understood this better than most. He built one of the most successful hedge funds in history, not by being the smartest person in the room, but by being the most disciplined, by being willing to prepare for what he couldn't predict. And somewhere in that journey, he created something remarkable, a portfolio designed to survive anything the world could throw at it. He called it the all-weather portfolio, not because it would make you rich in every season, but because it would keep you standing. For those approaching retirement or already there, this matters more than you might think. The information shared here is for educational purposes only and should not be considered financial advice. Everyone's situation is different, and what worked for Dalio may not be right for you. But understanding his thinking, really understanding it, might change how you see your own money. Because here's what Dalio knew. By the time you're 60, you don't need to be brilliant anymore. You need to be unbreakable. Let's start with where he began. Dalio wasn't born into wealth. He grew up middle class on Long Island, caddying at a golf club where he overheard businessmen talking about stocks. He bought his first shares at 12 years old, Northeast Airlines, and it tripled. Pure luck. He thought he was a genius. The market had other lessons waiting. By the time he founded Bridgewater Associates in 1975, Dalio had learned something crucial. Prediction is a fool's game. He'd seen too many smart people destroyed by being certain about the future. He'd felt the sting of being wrong himself. So instead of trying to predict which way the wind would blow, he built a sail that could catch wind from any direction. This is the essence of the all-weather portfolio. It's not about being right. It's about being ready. Think about what happens to most people as they approach retirement. They've spent decades accumulating wealth, often in ways that worked during one particular economic era. Maybe they bought real estate when housing was booming. Maybe they loaded up on stocks during the long bull market. Maybe they kept everything in bonds because that's what their parents did. And then the season changes. The strategy that made them money for 20 years suddenly doesn't work anymore. And they're too old, too tired, or too scared to start over. Dalio saw this pattern everywhere. He saw fortunes built in one environment vanish in another. He saw retirees who'd done everything right by conventional wisdom end up struggling because that wisdom was only right for one kind of weather. So he asked a different question. Not what will happen, but what could happen. And more importantly, how do I build something that survives all of it? The all-weather portfolio is his answer. It's built on a simple truth. The greed that makes you chase returns you don't need. It's the fear that makes you keep everything in cash and watch inflation slowly destroy your purchasing power. It's the pride that won't let you admit you were wrong about a strategy that stopped working years ago. The all-weather portfolio protects you from yourself. When stocks crash and your neighbor is panicking, you look at your portfolio and see that your bonds are up, cushioning the blow. You don't need to panic. You don't need to sell. You can wait. You can breathe. When inflation surges and prices skyrocket, you look at your portfolio and see that your commodities and gold are rising. You're not getting destroyed. You're protected. You can stay calm. When everyone around you is making money and whatever hot asset is booming, you look at your portfolio and remember, you're not trying to get rich anymore. you're trying to stay rich, there's a difference. Dalio built Bridgewater into a firm managing over $100 billion by understanding that difference. He had clients, pension funds, sovereign wealth funds, endowments, who couldn't afford to gamble. They needed reliability. They needed to know that the money would be there in 10 years, 20 years, 50 years. That's exactly what retirees need. The tragedy is that most retirement advice is still built for accumulation, not preservation. It's still optimized for the 30-year-old who can recover from crashes, not the 65-year-old who can't. Dalio's all-weather approach flips that script. It says, optimize for not losing first, then worry about gaining. Let's get practical for a moment. Implementing something like this isn't complicated, though it requires thought. You're looking at dividing your portfolio across multiple asset classes in specific proportions designed to balance risk, not maximize return. The standard all-weather split puts significant weight in bonds, both long-term and intermediate. This makes many retirees nervous. They've been told bonds are boring, that they don't grow enough, that inflation will destroy them. But here's what Dalio understood. Long-term bonds are incredibly volatile, just in the opposite direction of stocks. When stocks crash because of recession fears, long-term bonds often soar because interest rates get cut. That volatility, that movement, is what protects you. It's not about the steady interest payments. It's about the price movements during crises. The stock allocation, just 30%, feels too small to many people. They worry they're missing out on growth. But remember, this isn't about maximum growth. It's about consistent growth with minimal trauma. The gold and commodities, 15% combined, feel exotic to traditional investors, but they're your inflation hedge. They're what keeps you whole when currency loses value and prices rise. Does this mean everyone should rush out and build an all-weather portfolio exactly as Dalio designed it? No, that's not the point. The point is the thinking behind it, the philosophy, the recognition that your retirement portfolio should be built for resilience, not brilliance. That diversification means more than just owning different stocks. That preparing for multiple futures is wiser than betting on one. Dalio himself has said the all-weather portfolio isn't perfect for everyone. Your specific situation matters. Your spending needs matter. Your risk tolerance matters. Your time horizon matters. But the principles are universal. Spread your risk across different economic environments. Don't put all your faith in one asset class. Build something that can survive surprises. Accept lower peaks in exchange for higher valleys. Optimize for sleep at night, not bragging at parties. These principles have kept Dalio's clients safe through every crisis of the past 40 years. The dot-com crash, the financial crisis, the inflation scares, the pandemic market panic. Through all of it, the all-weather approach kept churning along, steady as sunrise. There's something deeply comforting about that. Not exciting, not thrilling, just comforting. And comfort at a certain age matters more than excitement. Consider this carefully. You've reached a point in life where your relationship with money has fundamentally changed. You're no longer accumulating wealth for some distant future. You're managing wealth for present reality, for the life you're living now and the years immediately ahead. This shift requires different thinking, different strategies, different priorities. The 30-year-old can afford to be aggressive because time heals all wounds in the market. Crash at 30, and you have 35 years to recover. Crash at 65, and you might not recover at all, not in the way you need. This isn't pessimism, it's mathematics. It's reality, and Dalio's all-weather thinking respects that reality instead of pretending it doesn't exist. He talks often about his holy grail of investing, finding 12 to 15 truly uncorrelated return streams. If you can do that, he says, you can reduce your risk by 80% without reducing your returns. That's the mathematical magic of real diversification. The all-weather portfolio is the simplified version of that magic. Instead of 12 uncorrelated streams, you get 4 or 5. Stocks, bonds of different durations, gold, commodities. Not perfect uncorrelation, but good enough, practical enough, simple enough to actually implement and maintain. Because here's another truth. Complexity is the enemy of execution. The more complicated your strategy, the less likely you are to stick with it. The more moving parts, the more things that can break. Dalio wanted something he could explain to a client in 5 minutes, and they could hold for 50 years. Something so simple it was hard to mess up. So robust it would work, even when everything around it was breaking. That's what the all-weather portfolio is. Simple, robust, unglamorous, effective. Let me show you something about human nature and investing. When markets are soaring, everyone wants to be fully invested. They see their neighbors getting rich and feel left behind. They abandon conservative strategies for aggressive ones. They chase returns. When markets are crashing, everyone wants to be in cash. They see their portfolios shrinking and panic. They abandon long-term plans for short-term safety. They chase stability. Both impulses are natural. Both are human. Both are destructive. The all-weather portfolio short-circuits both impulses. When markets soar, you're participating, just not as dramatically as the gamblers. You don't feel completely left out. When markets crash, you're protected, just not completely. You don't feel completely destroyed. That middle path, never the best, never the worst, is psychologically sustainable in a way that extreme strategies aren't. Dalio learned this by managing money for institutions, but the lesson applies even more to individuals. Institutions have oversight boards and long-term mandates that prevent emotional decisions. Individuals don't. Individuals panic. Individuals get greedy. Individuals make emotional decisions at exactly the wrong times. The all-weather approach protects you from your own worst instincts by making sure nothing in your portfolio is ever doing so well or so poorly that you feel compelled to make dramatic changes. It's portfolio design as behavioral psychology. There's a deeper pattern here worth understanding. Throughout his career, Dalio has been obsessed with studying history, not just financial history, but the history of empires, currencies, debt cycles, human behavior. He looks for patterns that repeat across centuries. One pattern he found: complexity eventually collapses. Empires become too complex to manage and fragment. Financial systems become too leveraged and crash. Strategies become too clever and break. Simplicity, by contrast, endures. Basic principles survive regime changes and currency collapses and market revolutions. The wisdom of diversification is as true today as it was 1,000 years ago, even though everything else about finance has changed. The all-weather portfolio is built on these enduring principles, not clever tricks or complex algorithms. It's old wisdom dressed in modern asset allocations. For retirees, this matters immensely. You don't need cutting-edge strategies. You need time-tested principles. You don't need to be on the frontier of finance. You need to be on solid ground. Dalio, despite running one of the most sophisticated hedge funds in the world, understood the difference. He could deploy incredibly complex strategies for Bridgewater's institutional clients. But when it came to building something for the long haul, something that needed to work across decades and generations, he went simple. That's not because he couldn't do complex. It's because he knew complex was daily in anxiety. The all-weather approach, or something like it, offers the possibility of that freedom. Not through magic, not through market-beating returns, but through the deep confidence that comes from knowing you've built something solid, something that's been stress-tested against every economic season, something that will likely still be standing when the next crisis hits, and the one after that, and the one after that. That confidence is priceless. Dalio understood this because he lived through his own crisis. That moment in 1982 when he was certain about the future and completely wrong, when his confidence nearly destroyed him, when he had to rebuild from humility instead of certainty. The all-weather portfolio is what emerged from that humility. It's his acknowledgement that he doesn't know what's coming, combined with his determination to be ready anyway. For someone approaching or in retirement, that's exactly the energy you need. Not certainty about the future, that's delusion. But preparation for multiple futures, that's wisdom. As we close this conversation, think about what you really want from your money at this stage of life. Do you want the thrill of big wins and the terror of big losses? Or do you want steady progress and peaceful nights? Do you want to spend your retirement monitoring markets and adjusting strategies? Or do you want to set something up that works without constant intervention? Do you want to bet everything on your ability to predict what's coming? Or do you want to prepare for the fact that nobody can predict what's coming? These aren't rhetorical questions. They're real choices that shape real lives. Dalio made his choice. He chose preparation over prediction, resilience over brilliance, consistency over drama. That choice built one of the most successful investment firms in history. More importantly, it built portfolios that kept their promises, that were there when clients needed them, that survived everything the world threw at them. You're not managing $100 billion. You're managing your life savings. But the principles scale, the wisdom transfers, the approach holds. Whether you adopt the all-weather portfolio specifically or just absorb its philosophy, you'll be better for understanding how someone who's seen every market cycle thinks about survival and growth. In the end, investing wisdom at this stage of life isn't about getting richer. It's about staying rich long enough to enjoy the life you built, to pass something on if that matters to you, to stop worrying and start living. That's what Dalio's all-weather thinking offers. Not wealth, security, not excitement, peace. And peace, at 65 or 70, might be the most valuable asset of all. The sun sets on every portfolio eventually. The question is whether yours will still be standing when it does, whether it will have carried you through all the seasons, the springs and summers everyone hopes for, but also the autumns